So here are the steps you need to follow. Step number one, you got to determine how much you need and why. See, the whole thing is a lot of folks are looking for loans, but they have no idea why they need the loan. You might have an approximate, a vague idea about why you need the loan, but if you don't have clarity in your own mind, the lender is not going to grant you the loan amount that you need. So it's very important to sit back. You can pull out a piece of paper, write down exactly what you need the money for and why. If you answer those two questions, amount needed and the use of loan proceeds, the rest of the process, the loan application process, will be very, very easy for you, especially if you're looking for a sole proprietorship loan. Remember, when we talk about sole proprietorship loan, this is a quasi business loan. Obviously, a sole proprietorship is not a business per se, but whether you are working for yourself, you're self-employed, or you're an independent contractor, the lender is looking at you and see, okay, does your activity generate enough revenue to actually assure prompt repayment of the loan? This is really important. Okay, so have a clear idea about the reasons why you need the personal loan. I mean, this could be anything. It can be debt consolidation. It could be you are looking for an alternative to payday loan. In other words, you don't want to actually grapple with the very high APR that payday loans sometimes have. This is totally understandable. I've been there, done that. I really understand. You can actually take out a loan for your sole proprietorship for home remodeling. This is really this could make sense. For instance, if you work from home, right? So your house constitutes some kind of a home office for you. You can take the cash for moving costs, for example. You can take the cash for emergency expenses. We've seen this a lot with our business clients. You can actually borrow for large purchases, especially when those purchases have to do with your activity, the kind of activity that produces revenue. Remember, revenue production is very important. You can take the cash for vehicle financing, wedding expenses, vacation costs, and what have you. So you can see that we have a whole smorgasbord of sole proprietorship loans that is available to you. But it's very important that you are clear about how much you need and why. Step number two, you have to actually determine how you intend to repay the loan. And this goes back to what I was just telling you earlier. By the way, I want to quickly welcome you back to the show. It's really a pleasure to have you here. I appreciate having you. And so when we talk about determining how you intend to repay the loan, this is really important because the lender is going to look at your debt to income ratio. We're going back to the concept of DTI. This concept you might have heard of before. I understand. And you're probably just like, okay, this is this again. Well, DTI is quintessential. DTI actually tells the lender whether or not you are a sure, quote unquote, sure risk. Okay, so if you want to actually calculate whether or not you will be in a position to repay the loan, your DTI is a good place to start that calculation. Why? Because DTI tells the lender, for example, whether you have enough bandwidth in your budget to accommodate an extra loan. That's how we think about it. In other words, your disposable income, think of your disposable income as some type of spectrum, some type of continuum, budgetary continuum. And anytime you have a loan, they will take a small room in that real estate that your budget constitute. So the more real estate you have in that continuum, this becomes saturated. So you have a very high DTI, which you don't want anyway. You want to keep a reasonable DTI so that you are able to tell the lender, hey, listen, I'm pretty fine. I'm fine. I don't need 25 grand. I'll go with 15 grand. I'll go with 10 grand. Then you boost your chances of receiving the loan, the loan amount that you have that you apply for. This is really important because when we talk about sole proprietorship, lenders analyze your loan application at two levels: at the personal level, but also at the business level. Remember, a sole proprietorship is not a business per se, but it is a quasi business because you are generating revenue by yourself from this activity. And so your personal fate, if you will, your personal circumstances are sort of intertwined with the circumstances of the business. Okay, so this is really important to pay attention to your debt to income ratio. Step number 3, you have to evaluate your financial situation. And again, we go back to, I want to quickly remind everybody of today's conversation here. The topic, we are having a convo about sole proprietorship loans. How do you actually be in a situation where, what is the formula that you need to apply every time you look for a sole proprietorship loan? What is the formula? That formula that you need for constant success. Okay, so you got to evaluate your financial situation. And when I'm talking about financial situation, I want to go back to the dual analysis that I just mentioned, personal and business. You got to do that. And this only happens for sole proprietorships and single member LLCs and single member S corporation. When you have a company, when you have a business, when you have an economic enterprise that is linked, okay, to only one person, lenders have to analyze both aspects of the business, the personal affairs of the undertaker, the entrepreneur, but also look at the business side of things. So when we talk about evaluating your financial situation, we're talking about your net worth. Net worth equals what? Your total assets minus your total liabilities. Accounting 101. Okay, so your assets constitute what you own. Your liabilities constitute what you owe. So when you subtract your total debt, your total liabilities from your total assets, you have your net worth. And you want to have some kind of decent net worth. Obviously, you want your net worth to be positive, because if you have negative net worth, you're broke. You're more than broke. You're really, really chilling right now in the FICO basement. Okay. I mean, even though, having said that, you could be broke and have a high FICO score, but that's beside the point. So when we talk about analyzing your financial situation, we are looking at your net worth. We are looking at your debt levels. Okay, what kind of, are you over indebted? Do you have huge levels of debt? We kind of look at your retirement accounts. What about what's going on with your retirement planning? This is important. We look at your credit reports and score. We look at your savings, particularly we look for emergency funds that you have. We'll look at your education. Yeah, your education plays an important role when we analyze your your level of financial literacy. And your financial literacy has an impact on your financial situation. And also, lenders will pay attention to your investments. So I'm just kind of giving you a comprehensive overview of what financial situation entails. So when you analyze your financial situation, you have a clear idea of what you should look for. Step number 4, and this is kind of important if you are trying to improve your chances of getting a sole proprietorship loan, make sure that you check your FICO score. Checking FICO score is really important. Obviously, you can check your FICO score for free. We've said this before. Don't let anybody dazzle you, talking to you about paying to check your FICO score. I know that Experian, TransUnion, and Equifax, they're running some kind of schemes whereby they tell, it's not really a scheme. I mean, they're trying to make money. I'm not blaming them for that, but they have programs, they have products, they have services in place where they're basically charging you to check your credit score. But if you need only to check your credit score, you don't need to pay for it. Now, Experian might want to charge you for extra information. Well, go ahead and pay for it. If you need that info, go ahead and pay for it. TransUnion does something similar, same thing for Equifax. They all do that. But the bottom line for me here is that you don't need to spend money to check your FICO score. You can go to annualcreditreport.com. You can go to Credit Karma. You can go to a NerdWallet. You can go to your current credit union or your current bank. They all provide some kind of FICO score where they give you your FICO score. They provide every month your FICO score on your account statement. So you really have a variety of locations where you can actually check your FICO score for free. So don't try to really pay for it unless you're really interested. you're interested in having, I would say, additional information always. But otherwise, you can always check with your bank. You can check with your credit card issuer. Okay. For instance, Capital One provides that service. I mean, they give you a free FICO score. Discover does the same thing. American Express does the same thing. Chase does the same thing. Citibank, all the big players provide this information in some way, shape, or form. So it's not really in your best interest to pay for it. Okay, and sometimes you can also go to a nonprofit credit counselor who will actually provide you with that info for free also. So again, a long story short, if you are trying to get a sole proprietorship loan, you want to get approved ASAP, check your FICO score, and you have a lot of places where you can check this FICO score for free. And while we're at it, you can also check your Vantage score 3.0 also to see if there is some kind of gap, some kind of chasm between those two metrics. Step number 5, you have to check online lenders. By the way, I want to quickly remind everybody on today's topic, we're having a conversation about basically how to how to get a sole proprietorship loan, how to get it the first time around, how to actually get a massive amount. This is important because you want to get a massive amount. Otherwise, it's like you go big or you go home. Okay. But so the thing is, you have to be specific. You have to discriminate when it comes to the type of a lender you want to associate yourself with, you want to apply at. And what we do is we always go for lenders that allow you to lenders who allow you to have a soft pull. In other words, you can pre-qualify for the loan so that you're basically preserving your FICO score. For us, this is really important when we analyze those lenders. You want to make sure that you're not actually wasting very valuable FICO score points through hard pulls, through immediate hard pulls. So check online lenders first. So you can check SoFi, for example. SoFi is great if you have good credit and you're looking for a sole proprietorship loan. Okay, they have competitive interest rates. They have unemployment protection. They have members only perks. You can check Marcus by Goldman Sachs. And this is a great place. I mean, this loan is great if you are trying to look for a debt consolidation loan for your sole proprietorship. So you need good credit to qualify, like 640 to 660. That's the minimum. They have competitive interest rates. You are able to pre-qualify. You can change your payment due dates. You have rewards for on-time payments. You have Lightstream. Lightstream is great for a home improvement. So if you're looking for a sole proprietorship loan for a home improvement, Lightstream is great. Lightstream, by the way, is a subsidiary, is a unit of Truist. The Truist Bank is an online division of Truist. Okay. You also have Discover. Discover is great if you are looking for customer-friendly features. I would say borrower-friendly features. They also have multiple term options. They have competitive interest rates. We love that. I mean, Discover has been great for sole proprietorship loans forever, for 20 years, for 20 plus years. And you have Avant, for example. If you are trying to build credit and you are looking for a sole proprietorship loan, Avant will be a great place to start looking at. They will qualify you with less than perfect credit, not a problem. You are able to pre-qualify. Okay, now the only drawback here is that you should expect more fees. Okay, they charge an administration fee of up to 4.75%, and their APRs are not really that low either. Step number 6, I want you to check bank and credit union lenders. The thing here is that don't discount like the lenders that you have known forever. I mean, you started at a bank. Nowadays, it's very easy to have accounts at online banks and whatnot. But let's go back to banking 101. We all grew up in neighborhoods where you had the local grocery shop, right? You had the local bank, the local credit union, and whatnot. So go back. If you're looking for a sole proprietorship loan, go back to those lenders who have been there forever, especially, and this is a great place to start if you have a great relationship with a bank. Let's say you have been with the same bank for 10 years, or your whole family has been with the same bank for like 40 years or 50 years, over 3 or 4 generations, you have cultivated a relationship with that bank. They know you, you know them. You probably have barbecue together. You see them at happy hours and whatnot. You discuss with you actually you know them. When the bank becomes part of the community and you are part of that community, it's better to start when you are looking for a sole proprietorship loan to start at that particular bank. Not only would you have a higher chance of being approved, especially if you have less than stellar credit, also you will have better terms, lower fees, okay, good, decent APRs, very generous amounts, and so it's really interesting. So when we talk about banks, there are real banks and credit unions. They're very friendly when it comes to sole proprietorship loans. We have Wells Fargo. Wells Fargo is great for home improvements. They are related to sole proprietorship. We have a PNC Bank. Wells Fargo, by the way, they will lend you up to $100,000. You have a PNC Bank, which is great for co-applicants who are looking for sole proprietorship loans. So PNC can actually grant you all the way to 50 grand. You have a US Bank, which is wonderful for short-term sole proprietorship loans. Okay, and they actually they have an auto pay discount, for example. This is really great. You have Regions. So Regions is kind of cool also. Regions is fantastic when it comes to giving you a range of sole proprietorship loan options. We love that a lot. And Regions actually has is very great. It's very big in the Midwest and South. Okay, they have more than 1,300 branches. So they are a regional player that you should count with. They're good. They're really good. And you also have One Main Financial, which is great if you are looking for a sole proprietorship loan that it will accept a lower credit scores. So a lower credit score. So think about that. Step number 7, you want to review loan requirements and apply. So you've done all the homework, you have actually gone through all the research. Now it's about time to finalize the whole sole proprietorship loan application process. Okay. And the thing here is that don't you actually take the first player that comes to you. No, you really want to shop. You want to comparison shop. You want to compare and contrast whatever they're offering you, so you are clear about the final proposal here. Okay. So the thing is, if you qualify for a smaller sole proprietorship loan than needed, it's really possible to increase the loan amount you are eligible for. Okay, so you try to shop multiple lenders. I just gave you a list of online lenders as well as bank and credit union lenders. Try to opt for a longer repayment term. You can probably try to enlist a co-signer. Let's say you have a FICO score that's kind of low, and you kind of realize, listen, if I do this, if I go this solo, my chances of approval are kind of low. So I need help. So try to see in your family, in your entourage, if somebody will be able to vouch for you in terms of credit. They will actually lend you, quote unquote, lend you their good credit score. Make sure that you explain to them the pros and cons of co-signing, though, because the last thing you want is to have a situation where you don't talk to each other because things went south and the people are pissed, whatever. Listen, so explain everything. You can also pay down existing debt. You can increase your income. You can improve your FICO score also. This will allow you to actually qualify for better terms. So this is really important. And I want to go back by saying you want to shop multiple loan lenders when it comes to sole proprietorship. You really want to, because when you talk about Avant, for example, from Avant to Upgrade to Upstart, those have different eligibility criteria. They have different loan amounts, loan amount maximum, minimums, larger, like they have different payment windows, right? All those counts for your sole proprietorship, because remember, as I said throughout this show, when we analyze a sole proprietorship loan, we analyze that loan at 2 levels, the personal level and at the business level, because that's how lenders analyze this type of loan. They look at this duality. Very important. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about sole proprietorship loans, how to get a massive one real quick. First, you need to determine how much you need and why. Determine how you intend to repay the loan. Evaluate your financial situation, personal and business. You want to check your FICO score. You want to check online lenders. You want to check bank and credit union lenders. And last but not the least, you want to review loan requirements and finally apply. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.